Good morning. We're going to look at dollar CAD, even though it has been a little bit of a nightmare really. You can see that we've just stayed within this sideways band on dollar CAD. We're not really going anywhere. You can see that the moving averages have been caught out quite a few times and they're just flatlining, to be fair. They're flatlining at 133.54, 133.58. So unless it breaks out of this 134 area, we're going to stay within this band. We're going to stay range trading down to the low here. We've got that down at 132.74, but basically it's 133, 134. That has been the range. So we all await what oil's going to do, and I'll look at oil next for you. But by and large, you know, dollar CAD, or the loonie as I love to call it, you know, and it is the loonie because it's the Canadian bird, so it's the Canadian emblem. So it's not just because the currency is a lunatic, it is actually called the loonie for a good, you know, reason. But that doesn't detract from the fact that it is a lunatic currency to trade when it's not reacting very well or it's not trending. You know, this was an easy move to get, so was this one. I've got this base here, you know, we're nowhere near the yearly highs. The yearly highs are up here at 136.62, but it's got some work to do, it really has. And even if we did break 134, we've got 134.40, which is the 61.8 fib level, and then you've got the high up here at 134.67. So there is a lot of work to do on the currency to actually get it moving and get it out of this, you know, band that we've been seeing. Now, if we take a look at our indicators on the daily, you can see that although we've been going higher on the indicators, our actual price movement hasn't. The price movement has stayed in a range. So these indicators work a lot better when the market is ranging, because you can actually go, do you know, at 134 we're selling, at 133 we're buying. It's that sort of market that you can do when it's ranging as opposed to when it's trending, because once the market starts to trend, then obviously the market can be overbought as much as it wants, but if it's trending higher, it's not going to turn unless something shows you it's going to turn. And at the moment, I can't see anything exciting in the dollar CAD, so I think we'll have a look at oil and move swiftly on from this quite boring market at the moment. Now, oil, as you can see, for most of the year has basically gone up. So it's gone along with the stock markets. It's gone up and up and up, and we know why it stopped up at that 76.90 area. We saw that on the monthly charts, if you remember, where it hit a specific long-term 61.8 fib level and the market just went straight the way down. Now, we have recovered, you know, we've gone past the 50% low level, we've gone past the 61.8 level, we're above all of the moving averages that we look at and we use. And if you look at what we've done here, we've turned bullish off of quite neutral levels. Now, that in itself is a good sign, but that could just have been from yesterday's price action when Europe wasn't open. So we've had a little bit of a sideways move. Now, the dollar CAD hasn't reflected it. In fact, dollar CAD has gone up 0.13%, you know, not 13%, 0.13%. So we're actually going up together. Now, this can occur, and quite often does occur. What you need to do is think, okay, what one is showing me the most reward if I don't want to take both of these trades? I don't want to trade oil and I don't want to trade dollar CAD. For my money at the moment, it would be more on the dollar CAD than the oil market, because I think dollar CAD is going to come down and I think the oil market is going to go up. So as we don't really trade oil that much, but we do trade dollar CAD, I'd stick with that one. I think that's much safer. You know your parameters in dollar CAD. But with the oil, there's nothing to stop us going up to here, which is coming in at the 78.6. That's coming in just at the 69.30 to 50 area. So that's a level to bear in mind. Obviously, you've got 6,800, 6,700. People do like round figuritis in these markets. But if you just keep that in the back of your mind, if we do dip and turn and dip and turn, overall, as long as we stay above here, which is all these tops along here, so we're looking at 64.80, 64.50. As long as we can stay above here on any pullback, oil should be good to go. We're holding on to both of the shorter term moving averages, and it looks quite sexy. Now, these have turned up, that's turned up, and our ROC, which is our rate of change, is just about to turn up as well. So, dollar CAD getting up to 134, I think it's a good place to sell it. Good luck. I will catch you all later on the desk.